So number 4 is a big one, forgiveness. How do people get forgiven of this grant? Is there something they need to do?
On the debt forgiveness, the general rule. 1, you apply. Let's say you get the $2,000. I'm going to use the couple I know because I'm sitting here talking. That's who I'm envisioning because I've talked to them several times. They got a $2,000. Well, if you look up the qualified expenses on the EIDL, there's a list. It looks a lot like the PPP, except it's more liberal. So as long as you spend it, it even covers the increase in cost of material. If you're paying payroll, the most important thing is to write it out of your business bank account. Now, I have people say, I don't have a business bank account.
Right.
Okay. Well, you're in business. And it's the old duck theory. If it walks like a duck, it acts like a duck, it looks like a duck, it's a duck. If you've got if you're in the business, that's separate. You got a separate bank account. You got a set of books and records. And it may be on a piece of white paper here going, here's my deposits and here's my expenses and that's fine. But it's separate. Again, a business should look like a business. And so in that light, if you have a business account, just be sure you're writing checks out to yourself. Be sure you're paying, the mortgage payment, the interest, be sure, those all qualify. Pay your employees, they all qualify. So if you'll just keep track and write the checks out, you'll be okay. So the $1,000 and their $2,000, I told them out of their business account to be sure and pay out the $1,000. It's a draw because they're partners. So that's not a W-2, they're partners. So remember, for this purpose, when they say in the EIDL grant, they're interchanging again the word employee with the word of an owner. So the important thing is write the check. If they're commingling the funds, I don't recommend that. Get a separate business account, lesson learned. But even out of that account, write yourself out, I don't know, I hate to say cash, but the thing about it, pay some personal bills with it. But the clean way is to have a separate business account.
Great. And so they don't have to apply for any forgiveness. They just need to keep records in case they get
like an audit.
Yeah.
Yeah. And I think I like the statement in your question to kind of summarize what I was saying is because you got to keep the records because they'll check you. But when I started, I said the general rule, it's in effect, I would call a grant, which means if you apply for it and you get it, it's yours. But if they check, then you've got to be able to show how you paid it out. Mm-hmm. Now, there's another one. There's several people that applied for this, the EIDL grant, and also the PPP. And if you look at the PPP form, on it, there's a line, did you get any EIDL? So if you here we're back to the same thing. In our original double dipping, you can qualify for something, but you can't double deduct or get double reimbursed. So if I got a PPP, whenever I go to apply for the forgiveness there, then what I get in the EIDL is going to come over on that app and be combined into that as a total amount. And at that point in time, if you haven't spent the money right, then you could end up, it's going to reduce your PPP payment. So you're not going to have to repay the EIDL, but it's going to increase the amount of expenses on that form. And see, that way you won't, the neat thing about that, you can't then double dip.
So you can't use the same expenses. You can't use the same payroll on the EIDL as you do on the PPP for forgiveness, correct?
You can't use the same, but the way it works, because you take the amount of the grant on the EIDL and put it over and up the amount of the money that, no matter which program, then that makes you account for it. So when I say I guess the thing we need to look here to wrap it is that if I do the EIDL grant only up to $10,000, and that's all I do, then I've got to save my documentations in case I get audited. Because specifically when it came out, it said you get this $10,000, it's yours. It's yours. But if you also apply, and I got these questions early on from my own clients, well, can I do both? My answer was, after a little research, yes, but you cannot use the same expense to keep both. And so I'm going to go back. How they do that is it's not you file two separate forgivenesses. It's just if you have PPP, this was a good move because this keeps clarity. Then whatever you got in the EIDL grant, up to $10,000, comes over here on the PP on the debt forgiveness. So that way you don't double dip.
Yeah. That makes sense. For a little confused, if like for the person who's making the $500 every month, teaching whatever online, they qualify, they get the money. But that money are you saying that money should probably go into, because they don't have a business account, they just have a personal account, and the money that they make just goes into their personal account with, the spouse's money. When they get that $1,000 or whatever it is best practice to create another bank account and put it in there and spend it only from that account?
Yeah. I think that's a great recommendation. Also make it a business account. And from that day forward,
keep that.
Keep
Use that.
All
Put
the
that money in there.
Yeah.
Right.
Become more compliant.
Make what you think isn't so official. Just because you're only making $500, that's still money. That's still money that you're putting back into the company.
Yeah, it's like I always tell people, if you think you're making too much money, my fees are deductible. How low do you want to take your income?
Yeah.
And I have
treat it as a business.
But John, that's a very good point. Because I do have people that actually put it in a separate account. But if you are, if you don't have a separate business account and you're doing everything through your personal account, if you get audited and you have losses out of it, the first thing you're going to do is that's one of the 9 points of a hobby loss is do you run it like a business or is it co-mingled? So if you're just because then you put your expenses down, under IRS audit, you're actually raising the potential of an audit adjustment because they're going to look and say, well, if you're commingling your personal stuff with your business stuff, you probably got some personal expenses in here. We're going to take a deeper dive.
And now they're in your personal life more than they otherwise would be.
Right. The phone call I had earlier before we started this was exactly that. It was the fact that the people were not keeping the money in the right account. Well, and her reply was, well, I know where it's at. It's like, no. If you get business income, it should go in the business account. You don't put it in your personal account. And that's what the agent is looking at.
The first thought for someone's mind would be, this is no big deal.
But it's
just me.
Right. But when somebody else goes to audit you,
right.
Hello.
Exactly.
Yeah.
They can't see into your brain.
Yeah.
See what that money is.
Well, but what you're doing is when you look at audit proof in a return, the very first thing you do in a business, separate bank account,
right?
Separate set of books and records, right? The duck walk. Mm-hmm. It needs to walk like a business, act like a business, and look like a business. And if you ever get an audit or they ask for these records, what will happen is that it's a much easier pain because you got good, clean records, things are accounted for. So all your business expenses look like business.
Sure.
Because you've already separated them.
Right.